some new lights. Okay, so if you see my videos, you know I've had these like LED strip lights, but today I got this lamp. Okay, same brand, and I can like control it. Yeah, control it from an app. So I don't know if this makes me look more professional, but we're gonna try it out. I've been kind of trying to like play with what looks best. And at first I was like under the impression that see, that's too much. I was under the impression the light will mimic the sunrise. Okay. I was under the impression that it was kind of dumb to have to use like an app to control these lights. But now that I have the app, I'm kind of like, okay, I can like make it look a lot better and stuff. I still don't really know. So, if this is going to help with the channel, then I guess we'll do it. Or I don't know if it's better just to have the one lamp in the back. You see what I'm saying? So I don't know. We'll have to figure that out. But we have a very exciting video today. Let's get into it. Okay, for the first segment of this video, real fast, guys, we have a very exciting announcement. All-time high in the portfolio, guys, $71,566. That's exciting, okay? The previous high at close was... Oh, wait, no. Psych, it's not an all-time high. Okay, well, I lied. We did have a close on December 9th at 72,000. But, almost an all-time high. I don't know how I didn't notice that until just now. So my point is, portfolio's been doing well. Today we're up $817. It says 1 year change, but that's not quite a 1 year change. That is since May 16th. Okay, I'm excited to get to May again, so I can have like the full 1 year documentation of this line graph. As you guys know, I was on TD. We came over to Schwab in mid-May, and that's why, I only have performance since then. But nonetheless, we are up 16 bands, okay? So I do want to go over, guys. I have made a move recently, a pretty big move in the portfolio, and that was trimming Apple, okay? I want to go over some technical stuff here on the Apple chart as well as on a few others. You guys know, I am a dividend growth investor. I say it every time. As a dividend growth investor, you're going to have a longer term bias, okay? Kind of a buy and hold forever bias, more in the camp of Warren Buffett rather than leaning towards, a higher frequency type of trader. I also have referred to this just when talking to peers as kind of like nest egg management, okay? With that being said, that doesn't mean if you're kind of, hardwired for technical analysis, it doesn't mean you can't use technicals, okay? And kind of the way I personally handle this is when I'm making decisions, okay, when I'm making decisions that involve my portfolio or any trades I'm making, what I do is I stick to weekly charts, okay? So, for the sake of my dividend growth portfolio, I'm not going to analyze any time frames, shorter than weekly candles. Does that make sense, guys? And this is kind of a hard rule I use because the minute, you kind of get zoomed in a little too much, you start analyzing a little shorter term patterns, it kind of takes away from, what is my goal here? All right. I'm a long-term guy. So I use, max time frame, weekly candles, and that's kind of been, my way of blending technical analysis into this dividend growth investing game. Even at my old job, we did a lot of long-term investing, some swing trading. as well as just managing our own portfolios. We would even go so far as to use, I still got them on here, quarterly candles. Maybe not on Apple, but on the S&P. We would even use, yearly candles. We'll go to see if I can find a better example of this. And, just because you're a longer term trader, I don't want you to ever feel like, that looks overextended. I don't want you to ever feel like you have to completely shun, technical analysis. Okay, that was a bit of a rant, but now we will, visit the Pepsi trade and Apple trim. So as you guys know, I've kind of been saying, I'm done trimming Apple. And this has been, now we're on 4 trims later. Okay, the first big one was at 215 with 13 shares I took off. All right, and that is, obviously a taxable event. That was a bigger decision for me. And I didn't anticipate this one to go much higher, okay? I made that move because I saw better opportunity elsewhere to the tune of what? Hershey in this consolidation, right? Okay, so I made that trim. I put those funds in Hershey as well as adding some new funds. Okay, I see that kind of disconnect. What happens with Apple? It does inch higher. Okay, what happens with Hershey? Okay, it breaks down out of this consolidation, which was not what this was not what I anticipated. You can even see I've got kind of this red line to, be the support line for this one. I anticipated a reversal. I've probably gone on record of saying, in an ideal world, that's what I saw happening. That's not what happened. Okay, what do? We took what the market gave us, and I trimmed again. Okay, so this one stays extended. I end up trimming twice more and kind of splitting these funds between Hershey. I put a few of those dollars in Pfizer, as we've kind of seen this one continue to be in this, ugly consolidation bottom is what we're hoping. And then recently you've seen me start the Pepsi position. Okay. So yesterday, I want to say I took my last tranche off of Apple. All right. And we're going to talk about why. So obviously Apple has continued to climb higher. I do see this one kind of in, a dangerously aggressive rising wedge. I do anticipate a pullback at least to that 200 week, below 200 I'm expecting. But I went ahead and took off 5 more shares. I got filled at 243 and change, okay? Apple's all-time high is just at that 260 mark. Not a perfect exit, but, we're not counting nickels in this dividend investing game. So I did free up that capital, and I'll tell you why. Not only did I see it, as more overextended, and I didn't ever anticipate Apple to continue this high, I see Pepsi as very beaten down, okay? And I've been able to lock in, a pretty impressive yield on this guy, all right? So right here, I had kind of the 144 mark is when I started buying. We see that getting broken down. And, in this channel I kind of had shaded, we see, what do we see? A double bottom on Pepsi, okay? I anticipate this being a reversal. However, as we've seen before, I've been pretty notorious lately for being, a little early on the trigger. Okay, Pfizer, I've been early on the trigger now for going on 24 months. So, again, this is what I anticipate. I anticipate a reversal at some point on Pepsi. But as you guys know, these consumer staples, these value industries are much more slow moving, than other types of stocks in the market, like Apple, Microsoft, etc. All right, so we see this double bottom on Pepsi. I'm getting excited about it. I'm trying to build out my position. As well as, I want to bring this up. Okay, so let's do it. What I would call, and I'm not trying to throw big, stupid words around, but I mean, if we can start thinking, and using the vocab of, professional money management, it's going to help us. It's going to help us treat our portfolio like a business. Okay, that's what this is. And what I would call this would be earnings arbitrage. Okay, so Pepsi reported earnings, let's see, very recently on February 4th. Okay, they had an earnings beat. Their earnings estimate was $1.94. They came in at $1.96. Okay, what do we know about earnings beats? Typically good for sentiment, okay, and can lead to some upward price action, right? What do we see in Pepsi's chart? It's kind of been falling down, okay? So now we have a positive event in earnings, and hopefully that can lead to, some sort of reversal, okay? Not to say that I'm rushed. So, just looking at the percentages, where are we at? Okay, just looking at the percentages, we can see Pepsi's EPS for the fourth quarter of 2024 as compared to the fourth quarter of 2023. Okay, that's the quarter ending in February. Does that make sense? Is up 17%. Okay, so EPS is up 17% in that same chunk, that same kind of, I guess, holiday quarter, end of the year. That chunk is up 17%. All right. Full year EPS is up 6%. Okay. What do we see here on net revenue performance? Okay. They're down, 0.2%. They're down basically 0.2%. So essentially that's no change to me. Okay. With that 17% uptick in EPS, what that means is Pepsi has gotten more profitable. Okay, this is a sign of good management. Does that make sense? So a similar revenue with more earnings. Okay, can we wrap our head around that? That's kind of the story this is telling me without me, having to dive into this full entire report and, try to be some guru. That's not really what's needed. Okay, so similar revenue performance with increasing earnings. That's a good sign for Pepsi. In my opinion, that's a good report. That shows that earnings arbitrage, okay, I'm kind of trying to explain here, all right, along with this double bottom. I am very excited about building this one out. Okay, guys, moving on. We will go over, the investment income. I want this video to serve as, I guess, the March review and outlook. I kind of had to preface it with all that information about the Pepsi trade. A lot of big things. So obviously, investing more capital as well as trimming, a lower dividend payer and moving that capital into names such as Pepsi and Hershey has increased my estimated income. I'm officially over that $3,000 hump. I think I clickbaited on another video when it was at like 28 and I was like 3K passive. But now for real, no more clickbait. I am officially $3,039.75. That breaks down to the monthly average of $253.31. Guys, okay, March, I will earn just under $340 in dividends. April, just under $312. And then May, kind of the lower guy, $108. I preach this every time. But don't fret, I guess. Don't fret about having like lower months because, it's a long-term game. It's all going to shake out in the end. You're going to add positions little by little throughout the years. And there's for sure going to be, some cyclicality to your dividend earnings. But it's not a big deal because, with a simple budget, you can kind of smooth that out. All right, let's get into it. Like I said, been some big changes. We will go ahead and sort by market value. The one that's kind of been running away at the number one spot is Altria, up to $54 a share. You know, we've talked about this one. I've reviewed this one, kind of, you know, tooted my horn on this one. But my cost basis on it is 44 and change, and it's at 54 and change. Okay, so it's been a good one. I'm up, you know, 10 a share on 250 shares. That's $2,440. And it has kind of, that profit has driven this one up to the number one spot, as well as some trims on Apple, which I am trying to ignore some tax consequences right now, but I need to start locking in on that. Next up, we got Altria pays me $1,020 in estimated income. Next up, Realty Income Corp, ticker O. This is my only direct real estate exposure. You could argue that Starbucks is real estate exposure as well. But Realty Income at $12,152 in market value, paying me $681. Again, only monthly payer in the portfolio. Yada, yada, yada. Next up, Hershey. Okay, this is one I'm proud of, guys. As you know, with the exception of Pepsi, okay, Hershey has been the newest addition. And, you know, I would say throughout the better part of 2024, there was very little management by the way of adding new positions or trimming positions. It was kind of me staying the course and adding to, I'd say, the underdogs in the portfolio. You know, towards the end of 2024 with Hershey and the beginning of 2025 with Pepsi, we've really seen, you know, some exciting like money management strategies. You know, it's kind of out of my control. Okay, I preach, take what the market gives you, and I have seen some exciting opportunities in Hershey and Pepsi. Hopefully continue to take advantage. Okay, because obviously I'm down on Hershey already. So, you know, cost basis on that is 183, and I relatively new position. Okay, because I started adding this, I think, under the 200. So, I mean, a lot of exciting stuff. Lower that Hershey cost basis, increase the income on it. Currently, it pays me $383. Moving on, guys, we got Apple. Okay, it is weird. 35 shares of Apple, down from 63 shares. I guess, was it down from 63 shares this time last year? Okay, oh wait. Yeah, this time last year, I had 63 total shares of Apple. You know, now seeing that at 35, it's a little weird to me. It had been my number one for quite some time, and you know, things have changed. So $8,604, paying me $35. You do see this $35, and you're like, oh, you're a dividend investor. What's up with that? This isn't a dividend stock. But let me challenge you on this and say, I mean, there's no better way to say this than like, look how much money I've made from Apple, okay? Even with all these trims, my cost basis is 154, all right? And now it's at 245. All that profit has been raked back into better dividend payers, okay? And this is not me being cocky. This is me saying the lesson here is don't write off stocks because of, you know, their starting dividend yield, okay? They could serve a purpose by means of diversification or, you know, eventually with Apple trimming it, realizing some gains and kind of just plowing them into other stocks. So, you know, this has been a good trade. This has been a good investment. This is one I'm excited about, but definitely will not be adding for a while. Okay, and I've said it time and time again, but I want to say, you know, for the fourth time, I'm probably done trimming Apple for the foreseeable future. Okay, I do, like I said, I do anticipate this correction coming here. It hasn't happened. You know, quite the opposite has happened. It's just kind of been a slow burn upwards. yeah, and it's led me to trim some. You know, we just talked about all that. However, I don't know if I can continue doing that just because in my head it's like, okay, I'm 23 years old. You know, at some point I have to, you know, mentally I'm like, okay, you know, let's keep some tech exposure. Let's not rack up too high of a tax bill on realized gains. You know, that's going to be a bit of a nightmare. Moving on, Starbucks, 70 shares, just under 8K market value, paying me 170. You know, whatever, same old. Next up, Pfizer, guys. I have 268 shares, coming in at a market value $6,941.20, and that pays me, you know, $461. I'm pretty excited about this one. I'm pretty excited about this one, but as you guys know, I think I've been pretty excited about this one. No, 100% I have. I've been excited about this one since before I even had this YouTube channel. So, I mean, I wanted to review Pfizer earnings in this video, but I also have like a lot of other stuff to say. So, you know, check out Pfizer earnings. I saw a really good video from like an investor I like to keep up with, and it was pretty inspiring to me. You know, let's not go on a tangent though. So hopefully add a little more to Pfizer. I've spoke on kind of this 300 mark, getting 300 shares. That's a rough estimate, but you know, I don't know. I want to make some more money and kind of make some things happen here. Next up, guys, Pepsi, the newest guy, 33 shares. I don't know how high I want to take this one, but you know, I am kind of on record of saying Pepsi is a very sleep well at night stock with great single stock diversification. I definitely would not mind taking this to, you know, 100, 200, you know, 300 shares. And that's like, sounds like a very lofty goal, but you know, getting it to 100 shares here in the next 12 months seems pretty reasonable, depending again on what the market gives us at this price per share. Okay, it's new, but it's already making me almost $200. Next up, Microsoft, similar boat as Apple, 10 shares, 4,161. You know, pays me $33.20. T. Rowe Price has been one I've kind of neglected some due diligence on, but it's not going anywhere until I have like, you know, a few days to really sit down, pretty much go through all the numbers, news, everything again, and see if I keep it on as a tertiary position, if I add to it or what. Right now I'm very happy with it being like the small fry. You know, pays me $76 a year, $16.27 market value. Okay, so that is the portfolio update. Hopefully I didn't talk too fast, but this is exciting. All right, so a lot of exciting things happening, guys. I hope you enjoyed this video, and again, I've got, you know, big plans. Okay, these lights are like pretty sick. Let me know what you guys think. Please subscribe. Again, I'm gonna be try to be very, very active this year. I said this year, but it's already almost March, which is crazy. You guys know I took the hiatus in January. You know, whatever. I explained that in the past videos, but I'm excited. Let's get it. Let's build wealth, and I'll catch you guys in the next one.